The Dallas Cowboys just made a huge statement, handing Dak Prescott a 4-year, $240 million contract extension. This makes him the highest paid player in NFL history. Now, when you hit numbers like that, especially in football, it's easy to get lost in the dollar signs, but let's break this down. First, the Cowboys weren't just throwing money at Dak because they like him. This is about keeping their franchise stable and competitive. Prescott was already signed through 24, but restructuring his contract before the 23 season was essential for two things: clearing up salary cap space and securing their quarterback for the future. That salary cap is like a budget. You need to make room for other key players if you want to win, and Dak's extension ensures they have flexibility. Now, why $240 million? That's because in today's NFL, the quarterback is everything. Prescott has been crucial to this team since he stepped on the field in 2016. He came in as a 4th-round pick, which means nobody expected him to be this good. He not only became the 2016 Offensive Rookie of the Year, but he's also been a Pro Bowler multiple times. The numbers speak for themselves: 4,902 yards, 30 touchdowns, and only 11 interceptions in his 4th season alone. And let's not forget that he bounced back from a major injury in 2020 with some of his best numbers in 2021, throwing for 4,400 yards. But here's where it gets tricky. Dak's 2022 season wasn't smooth. He missed games due to injury, led the league with 15 interceptions, and had a significant drop in his stats. That's concerning, right? The Cowboys fired their offensive coordinator after the season, showing they needed to change things up. Despite this, Dak responded in 2023 by bouncing back, making the Pro Bowl with nearly 4,500 passing yards and leading the league with 36 touchdowns. But that playoff loss to the Packers, that's the elephant in the room. The Cowboys haven't won a Super Bowl since 1995, and the pressure is on Dak to change that. So, what's the impact of this contract? Simple. Dak is now not only the leader, but also the guy who has to win. The Cowboys are betting on him to carry this team into the future. This contract tells us the Cowboys are saying, Dak, it's time to elevate your game and take us further. They believe in him, but now he has to deliver. With CeeDee Lamb also getting a big contract, Dallas is keeping his core intact, signaling they're not done competing anytime soon. And they won last night, so it's all good. Now, from the gridiron to the tech world, let's talk about Google, or should we say the artist formerly known as a verb. Now, for years, Googling is what everyone did. It was more than a brand, it was a verb. You didn't search, you Googled. But Gen Z, they're not about that life anymore. Now, when they look up something online, they're just searching. It might seem like a small thing, but losing that verb status can have big consequences. This shift comes from a study that shows Gen Z is changing how they navigate the internet. Rather than using Google, they're turning to apps like TikTok for recommendations. Think about that. Google, once the king of search, is being replaced by short videos and influencers. If you want to find the best restaurant or buy a new product, why not just go straight to TikTok where you can see it in action? So, should Google be worried? Maybe. Losing that cultural grip could mean less relevance with future generations. Remember Yahoo? They used to ask, do you Yahoo? Here's the kicker. Google might actually prefer this change. You see, when your company name becomes a generic term, it's harder to protect your brand. Think about how aspirin was once a brand name, but became so common that they lost the trademarks. So while Google might be losing some cultural relevance, this shift could actually help them in the long run. But let's move to the story of Big Lots and his financial freefall. Big Lots, a store I've never been to. The discount home goods store with over 1,400 locations is going bankrupt. They've secured $707.5 million in financing to keep operations going, but they're selling their business to Nexus Capital, a private equity firm. Now, here's the big deal. Big Lots is trying to survive by auctioning itself off, with Nexus Capital stepping up as the stalking horse bidder. Now, this means Nexus is setting the minimum price, and anyone who wants to buy the company has to outbid them. Now, Big Lots has been in trouble for a while. They've been struggling with declining sales, and their balance sheet couldn't keep up. This bankruptcy could be their way to restructure, but it also means a lot of uncertainty for their 30,000 employees. Now, for Nexus Capital, this is a gamble. Buying a struggling retailer in today's economy isn't easy, especially with inflation and changing consumer habits. But if they can turn it around, they can end up with a profitable business on their hands. Now, speaking of investments, let's wrap it up with a story about ETFs and how they're changing the game for investors. Exchange Traded Funds, or ETFs, have already topped records for inflows in 2024, and they're set to break annual records. But there's a wild card in play: money market funds. With over $6 trillion parked in these low-risk investments, the real question is, what happens when interest rates drop? Right now, people are putting their money into money markets because of the high returns. But as the Federal Reserve lowers rates, the returns on these funds will shrink. When that happens, we can see a lot of that money flow back into ETFs, especially those offering higher yields or exposure to growth stocks. Gold ETFs, for example, have been seeing strong inflows, and if rates drop, we can see even more money move into these areas. If the stock market stays stable, we can see ETF inflows break the 2021 record of $909 billion. So keep an eye on this wild card. How money flows out of money market funds will shape the investment landscape for the rest of the year. All right, y'all. So from Dak Prescott's massive contract to Google's cultural shift, Big Lots bankruptcy, and the rise of ETFs, today's stories show how money and influence are shifting across industries. Each of these stories impacts not just businesses, but the culture and future of their respective fields. Stay locked in for more updates on Millions Made News. Peace.